All right, let's jump right into this explainer and completely demystify the core grammar of business for all you commerce students out there. Whether you're prepping for your CBSE or ICSE exams, or honestly just trying to wrap your head around how money actually moves in the real world, you are in the exact right place. Picture this for a second. Imagine you're launching a student-run smartphone case startup. You're out there buying inventory in bulk, you're selling individual cases to your friends, you're paying for these really cool custom designs. I mean, how on earth do you record all of that without completely losing your mind? Because without a solid system, it's just pure financial chaos. So to cure that chaos, we're going to cover 6 key things today: the grammar of business, personal accounts, real accounts, nominal accounts, applying those golden rules, and finally, the ultimate balance. Starting right off with Section 1, the grammar of business and our core framework. Before we can even touch the rules, we have to understand the playing field. And a really interesting point here is that debits and credits, they aren't good or bad. People get tripped up on this constantly. They're simply directional flows, exactly like left and right on a map. Debit, which is usually noted as DR, is the left side, the destination of economic value. Credit, or CR, is the right side, the source. Keep that little compass in your head as we move forward. Moving right along to Section 2, personal accounts and exactly who is involved. The crucial thing to remember is that our very first rule deals entirely with the people and the organizations your startup interacts with. Kind of think of personal accounts as your startup's contact list. So if a human being or a legally registered business is involved, say your supplier for phone cases or your absolute best customer, it falls right into this bucket. And here is your very first golden rule. You debit the person receiving something from your business on the left, and you credit the person giving something to your business on the right. Debit the receiver, credit the giver. It's really just all about tracking that exchange of favors and obligations with the outside world. Let's look at this in a real ledger entry. Say on January 1st, you buy $500 worth of blank phone cases on credit from a vendor. Well, because Tech Supply Co. is the giver of these goods to your startup, we credit them $500 on the right side. They gave us value, and now we have a pristine record of it. On to Section 3, real accounts and what's physically being exchanged. Okay, so while personal accounts track the who, real accounts track the what. Basically, if you can physically touch it, like cash in the register or a shiny new laptop on your desk, or even if it just has lasting financial value for your startup, it is a real account. These are the actual assets that belong to your business. This second golden rule is super visual, and honestly, it's incredibly intuitive. If an asset enters your business doors, you debit it. If an asset leaves your business, you credit it. Debit what comes in, credit what goes out. Just picture physical items moving in and out of a giant warehouse. Let's cement this with a real-life situation. On January 5th, you buy a $1,000 laptop for work using cash. So what's happening here? Well, the laptop comes into the business, right? So following our rule, we debit the laptop account for $1,000. But cash is going out to pay for it, so we credit the cash account for $1,000. In and out. Perfectly recorded. That brings us to Section 4, nominal accounts, and why things happened. We're finally hitting the category that explains the why behind your startup's day-to-day operations. Now, these accounts don't represent physical things you can hold or people you can call up on the phone. Rather, they represent the operational events of your business, the daily grind. Things like paying your monthly rent, earning sales revenue from a customer, or paying a salary. They measure your actual performance over time. So, your third and final golden rule acts as your profit tracker. All your expenses and losses, they hit the debit side on the left. Meanwhile, your hard-earned income and gains sit happily on the credit side on the right. Debit expenses, credit incomes. Putting it into practice. Say on January 10th, you pay a graphic designer $200 for your startup's cool new logo. That is absolutely a cost of doing business. It's an expense. Therefore, we debit the design expense account for $200. And since cash is going out, remember our real account rule from a minute ago? We credit cash for $200. It just all connects so beautifully across the different account types. All right, Section 5, actually applying these golden rules. You've got the rules, but how do you use them under the intense pressure of a Commerce Board exam? Well, memorize this 3-step foolproof method, and I promise you, you will literally never freeze up on a journal entry question again. Step 1, find the 2 accounts hiding in the transaction. Step 2, categorize them. Are they personal, real, or nominal? And step 3, apply the specific rule for that exact category. Let's practice this together. Let's test your knowledge with a slightly tricky real-life scenario from your startup. You sell a custom phone case to your friend Sarah for $50, but she hasn't paid you yet. It's on credit. Take a quick second to think through those 3 steps we just discussed. Let's break it down together. First up, identify the accounts. We've got Sarah and we've got sales. Next, categorize them. Sarah is a person, so she's a personal account. Sales represent income, so that's a nominal account. Finally, apply the rules. Sarah is the receiver of the phone case, so we debit the receiver. Sales are income, and we credit all incomes and gains. Boom. Debit Sarah $50, credit sales $50. You just perfectly translated a messy real-world event into the elegant language of accounting. Which brings us to our final stop, Section 6, the ultimate balance. This is literally the magic of double-entry accounting. Every single transaction you ever make has a dual effect, a give and a take. If you apply the 3 golden rules correctly every single time, your total debits will always perfectly equal your total credits. If they match, your financial story is perfectly balanced. And if they don't, well, you've got some investigating to do before your exam is over. You know, as the quote here reminds us, accounting truly is the language of business. By deeply understanding personal, real, and nominal accounts, you aren't just blindly memorizing definitions to pass a test. You are quite literally learning to read and write the language of commerce itself. You're building the exact foundation you need to run any enterprise. So, as we wrap up this explainer today, I want to leave you with a bit of a challenge. Look around at the businesses you interact with. Next time you buy a coffee or pay for your favorite streaming service, just pause and ask yourself, in their books, what is being debited right now and what is being credited? Once you start seeing the world through these 3 golden rules, I promise you'll never look at a business the same way again.